Welcome to Bears in Exile. Today is September 26th, and it is the market overview looking at the Dow, SPX, VIX, XY, TNA, UUP, FXE, GLD, and SLV. Well, we had a really interesting day, and before I go into the video, I apologize for the video being so late. I was out buying a car for my wife this evening, and so she is very happy, and I am a little poor. Anyways, uh, on to the Dow. We had a massively strong day. It was rather incredible. And before getting into the daily, I'm actually going to blow up the 5 minute because the day started off the way that I was hoping it would start off. I had a little pop and it went down and it went down and then it was off to the races. And overnight we had the euro breaking major support. And what was the cause of this whole rally? Well, I believe that it was all due to a what I would consider a fraudulent report on the media. I was watching the Larry Kudlow show, and he actually had this gentleman on there, and he went in and he broke this big news that we're going to have TARP for Europe and everything. But once they got into the interview, he was saying, well, this may not actually be what happened, and it may not be just like this. It's just one of the things that's being kicked around, and man, what a scam. But anyway, that's what we have to deal with. So there it is. Ended the day with a huge green continuation candle. We said that we had this minor hammer the day before, and that people might suggest that this was a moment for it to bounce. Well, it was the perfect setup for that story that came out, so it was used. We did break through the lower price consensus level. We have the fast stochastic ticking up along with the CCI, the RSI, and the histogram. If a neutral move on the MACD, downtick on the slow stochastic, downtick on the 14-day RSI moving average. So kind of a mixed bag. I mean, at this point you would look at this and say, oh, we're just doing a gap fill. We got to go up to the top of this candle and then see what it does. Well, yep, that's pretty much what Guppy is telling us now, because we have an uptick. And the uptick gives us a target just a hair above the candle that everyone's looking to fill. So a little bit above that, and then we'll have a bubble corrective move, and we can see what it will do at that point. But I still think that this is bearish, but I guess this is going to go and do its expectation move, and what happens from that point will be what we're looking for. Now, it all isn't perfect. Here we are on the 60-minute, and yes, we do have complete crossover and getting separation. It entered the bar. It has already put the hurt on the bar, and at this point we can see that the CCI is very high, the stochastics are very high. 14-day RSI moving average is just barely starting to tick up. We actually have a downtick at the end of the day on the regular RSI, uptick on the MACD, uptick on the histogram, and I would imagine that these will come back down to meet the 14-day RSI moving average. It would be really amazing if they're just able to be stuck up there this entire time while the 14-day RSI moving average marches up to meet them, but we're going to have to see. Obviously, if that were to happen, this is going to go through the roof. But if we get to the 60-minute time frame, I'm sorry, the 30-minute time frame, we have divergences, a few of them, working their way together. We have one on the histogram. We have one on the CCI. We almost had one on the stochastic, but that got destroyed at the end of the day. So it's not perfect, it's not awful, but certainly What an amazing move today. Just incredible. Actually, we can see on the 15-minute better the divergence in the histogram and in the RSI and in the CCI. So to say that this is just a massive rally that's just going to shoot to the moon and the bears are finished, I think that's a little bit presumptuous and early, but we will see over the next couple of days. SPX more of the same. We have our uptick. The uptick is target is just above the candle we're seeking to fill. It is very close to that fill right now. Perhaps it won't even hit the uptick. It'll just do the fill and fall apart. But we'll see. 14-day RSI moving average sloping down, and everything else for the most part sloping up. So I don't give it the greatest chances of turning around, going up, hitting the bar, breaking through it, and going on its merry way, but we shall see. Now the VIX, you could call this inverse hammer, you could call it a shooting star. We do have a downtick. Downtick gives us a target of 37, just a hair below 37, and certainly the candle would suggest that. That it did not break this previous peak over here is unfortunate. At one point during the day we had broken above 42, which was a really good sign, and it all just fell apart. The euro rallied, and that was it. That was it for the bears for today. XOI, very nice. Uptick, same as everything else, just above the bar we're looking to fill. 14-day RSI moving average ticking down. And TNA ended with a hammer. We have a slight uptick. It has a target just shy of 40. Actually, it makes it more like just shy of 40, which would be just shy of the major price consensus level. So if it's not able to break that, we know that we have not nearly as strong a move as we think that we do. Going on to UUP, ended with a inverse hammer or a shooting star. It is bearish engulfing. We do not have a downtick, and so that is really interesting. I mean, certainly we could get one tomorrow if we have another bad move. But it's going to be all up to the rumor and innuendo and manipulation of the euro. As you can see here, we've been watching the stochastics and the RSI. They have been very high. We've said that this is a problem. So maybe this is actually the precursor towards a down move in the dollar and a rally in the market. You can see that we have negative divergence in the histogram, and that is not a good thing to have on the daily. And we also have that in the CCI. So maybe we'll have a back test of the 200-day moving average, maybe just a bubble corrective move. I'm not sure, but yeah, it could look a lot better. FXE ended with a hammer. Short-term moving average is still pointing down. Middle Bollinger Band headed into the short-term moving averages. Maybe we'll get a cross. 14-day RSI moving average very low. Could spell trouble. Positive divergence on the histogram. Positive divergence on the CCI. Yep. Gold ended with a hammer. Of course, we have no uptick. We have excessive separation, which is normal going through the bar. At some point, it will need a corrective move, go back up and kiss the bar and either work on it or bounce off of it. 14-day RSI moving average very low, along with the stochastics. I would expect that to turn around at some point in the near future. And SLV more the same. 14-day RSI moving average not as low as gold. ended with a nice green candle. We do not have an uptick. We do have excessive separation. We should get a bubble corrective move at some point in the near future. And that's about it. There is not too much to say. We need more data. We need to see what the market does. And if we are indeed still in a bearish phase, which I think that we should be. But if it decides to turn around and go to the moon, then we'll have to work with that too. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.